Seems like it's live. Black screen now. Seems like see, excellent connection. What's going on? Hey guys, okay, cool. So we are, yeah, what's going on, Kaka? Oh, loco. What's that? Kaka, loco. Okay, one sec. How did you get to the live stream? I can't seem to see it on my phone. Trying to get it up here as well. For some reason, it's not showing. Very strange. Give me a second. I'll have a look at Aussie Swiss in a second as well. Stream health. Yeah, it seems like the stream is working, but my here we go. I believe I can see it now. Maybe not. Warning, stream is currently going slow. Nice, okay, wicked. That is awesome, it's working. Alright, I just need to send this link over to my phone so I can just get the chat up on there. Give me 1 second. I need to sort this out, the slow starts to these calls, but... Alright, sweet. Cool, now I can see the chat as well. I'm gonna jump straight back into it. So if I go over to here, take this shield off, and you should be able to see the charts now. Cool, brilliant. All right, so let's jump into Aussie Swiss. So Aussie Swiss. Oh, so I'll show you first what I'm looking at. Actually, let's do Aussie Swiss first. So got Aussie Swiss over here. So I know you took the short on Aussie Swiss, a double loss though. That sucks. I can see where you took it, and I'm just going to mark them up. You probably sort of like here. So let's just break it down from the higher time frame. So key point here is obviously, yeah, we do have a low there, we have a high here, we have a bit of a range here where we have that little hook point there, we had this point here which got taken out there, and then we had the low over here, okay, which coincided with, you know, this low here. So that was kind of the area of the range. That was just a random piece of hook point. That was your real sort of area of interest, and that was the range. So this is a tricky one because look, when you see it from the daily, you basically had that as the beginning, right? Look at the beginning of the short here. Look at that candle formation, right? You had your evening SAR right there. Look at the start of that big sell as well. You had a bit of a pin bar there as well. If I pick up another piece of information, like look at the confirmation here. If you look at it there, you had a failed continuation there. So again, these all start with something, but this coincided with a bit of liquidity to the side here, then broke. We had this little point here. This was a bit of consolidation off the back of that, and then it just broke to the downside, smashed through it, left a low, came back up, essentially failed to retest it, but near enough just squeezed it upside, came down, created continuation, correctively moved to the downside, left a gap to this point, created continuation, tapped into the gap, scooped back up again, tapped into this section here, again failed to continue to the downside, came up correctively in a bit of an M-star situation here to that area of interest, but it didn't tap into the high entirely there, and then it sold off. As it sold off, what did it do? It tapped into the area with a section 1, section 2, and section 3. So at that point there, you trying to short it was quite a difficult scenario, because you can overall see that this is range bound. It's not in clear trending market conditions at that point, because by the time it got to that third section low and how it responded, that was kind of a very tricky situation for you. So the daily would have been a bit of a clue in terms of what you were looking at, because it didn't respond in the way it should have. But more importantly, you see the difference when that was a buy. Okay, interesting. But just want to point this out. You see this trending environment here. This is a little bit different to what we're seeing over here, because at this point here, we had a steep pullback, then we had a corrective push away, but we didn't get follow through from here. And that's what we would have really wanted to see in continuation with that overall leg to the downside. The fact of the matter is it moved sideways. So regardless if you're going buy or short, you're in a sideways market condition on a Swiss pair. And that's one of the reasons why I kind of am a bit careful with the Swiss pairs. But we look at the buy. So if you took the buy from here on a daily play, fair enough, that would have been pretty decent because you got the best protection, just not the best risk reward. Let's pull up this refined. So just to clarify, were your trades within this part here? If you just say yes or no, if it was within that run there. I assume it was, because it would have been this week. And then if I just look at it on the 4 hour, so we obviously had above that high. Okay. All right, we'll have a look. Latest one. This one here. Or this one here. That would be numbers. Ah, okay. Okay, the first one. Okay, cool. we'll come to that. So just for people who are watching as well, because they might be curious how we got to the trade. So obviously we saw the higher time frame just now. We've tapped into the third section low there, which is interesting. There was a first entry was pretty much on the daily in this section here. We then came in with the next point here. If we look at it on the 4 hour, not the cleanest, but we are creating sort of sections in there where we're basically accumulating, tapping into that level. If I measure this up as well, which I think is extremely important, you know, yeah, borderline at this point here, we're trading above 50%. So the probability of this coming up to the upside and responding to one of these hook points is becoming a lot lower. And the odds are that we're probably going to make a move higher. So looking for longs, definitely with you there on that one. Let's see. So yeah, if we identify some structure in here, I don't actually think that anything you did was entirely wrong. I think I'm looking for the entry. What time frame did you take your entry on, by the way? Just out of curiosity. So obviously, like we can see, we didn't respond to this point here. We didn't respond to this point here. And when we got to this point here, we didn't respond. So we can see it. Obviously, this became failed continuation here. So for that reason, you know, that was more of a sign that we're moving to the upside. Over here, same situation, failed continuation, another sign we're moving to the upside. So again, it's one of those ones where I think if you were trying to buy it or sell it in these areas, I understand why you would have taken a loss or break even. But then again, we're looking at the buy, so it's on a 1 hour. Let's go back to the 1 hour. Yeah, it's a tricky one. Let me have a little look. We are further in the run, that's the thing. That's the only thing that I can really see is we're further in the run. However, in terms of weight, this actually looks pretty decent. You should have technically still been in the trade, because you wouldn't have necessarily taken the trade there. I think if you did, it's not the best 1 hour candle, but I understand the play that you're playing. And then because it came down for the 3, that should have been the trade that you took, but you probably cropped the wick, and that's why you took the loss. You cropped the wick and took it here, probably, and you took the loss. And then I assume what happened was it came back down, and then it kind of just did something like this, and then you maybe jumped in the trade. I mean, I can't see the second loss. I can see the trade here why you would have taken a loss, and I don't think entirely you should have taken a loss. I think you should have taken a break even on this one. I think that should have been a break even at that point there. Borderline, because really and truly after a candlestick confirmation like that, it's either going or it's going to mess about. Those are the really two likely scenarios. So, you know, really and truly after this candle confirmation, and it's had that push away here on that candle there, after you've had that strong push away there isn't much reason for it to just turn around unless we go to the lower time frames and we've tapped into something that is then, you know, working with the lower time frame. So then we see it for what it is, and we, you know, we have this larger section here. We kind of have it trickling in here. We look at it a bit closer where we have section 1, section 2, section 3. We've left a gap over here. You know, over here we failed, we came back down. We've then retested the low. We've even created failed continuation, and then we started squeezing out. There was nothing significant about this in the sense that why you took a loss. I think the trade is still there. I think it's just accumulating more volume. I think the trade idea is solid. The positioning is also quite good. I just think that the protection was a bit aggressive, and sometimes you can get away with it in some scenarios, sometimes you can't. You're further in the run, so it's a lot harder to get away with something like that. That's the only thing you have to come to a realization with. Is what I've noticed is, you know, when you've got a run like this, over here, in anywhere within this section here, you can get away with aggressive stops and cropping and stuff. Over here, somewhat, it's halfway through the range. So if I just put on that 50% tool again, it kind of will paint it a little bit better, because that's what I'm seeing without being on there. So anywhere below the 50%, this whole region here, you can most likely get away with those aggressive stops. As you start approaching this 50 to 70% region, that's when it gets a little bit more tricky, but you can still get away with it as long as the structure's there. But when you start approaching that above 70 to 100% region, that's when you're asking for price to get complicated and just start messing about with you. And, you know, it could just do a whole bunch of things in these areas where even if you take the perfect entries, you're more likely to take a lot of break evens. I mean, that's what I've kind of experienced. I mean, look, if we look at another 50% range, right, we take this one here, right, and let's just look at this. So if you look at this bit of price action here, what's interesting about it is, okay, we tapped into the low here, so that's done its job. Then we know that we could potentially be coming back to the upside. So then we start identifying some of these structures. And then what we can see here is that obviously, okay, let's say I'll zoom in a bit more, and we're going to stay on the 1 hour because that's what you were on. Down here, there was this structure here. So you've had your kind of like your failed continuation. This failed to show that it was going to commit. It started pushing up higher. At that point there, the 4 hour was probably in as well in the daily, which is a good sign over there. So, you know, you've got that momentum come in, then you've got this sort of continuation here. As you can see, if I go down to the 1 hour now, even if I took the 1 hour in there, I'm still quite well protected, and I can get away with a stop crop, for example. Like, let's say, you know, you've got your, let's say you're even refining it in like that, and then that was originally your flag. If I got in with this and I took the trade here, and most likely you would have probably protected a bit lower. So, because 10 pips is around about there. So even with 10 pips, even if you went aggressive with 10, you still would have got away with it. So again, you can see like we're below the 50%. Now let's apply the same methodology above the 50%, okay? So now and this isn't always going to be exact. Like I said, sometimes above the 50% you can get away with it, but it's more unlikely. So then it goes with the side of mitigating against the risk and stuff. This is where it develops and gets more complicated. So this is now between the 50 and the 70% region, or call it 50 to 100, right? It's more on the side of it's probably going to push higher, but it could be more complicated. So we look at the next continuation here, where we kind of have this section here. This one was quite self-explanatory because we had the gap, and then after this gap we came in and we tapped into it there. But let's say even so, if you took it here, you took it on the first retrace candle there after it tapped into it, you went with 15 pip stop loss. Likelihood is, you know, this trade went for around about 2-ish% and came all the way back down. Again, you wouldn't have probably held that to the loss. You probably would have taken a break even if you held it. So that's that. But then it comes back down into this section here, as you can see, and it does that. So the reliability of that flag is kind of what I'm really going with here. And the reliability of this was, even though you were correct, it still developed and became more complex, but the trade idea was still correct. The positioning, the thought process, the market direction, all of that was correct. And that's basically what you have now. You have correct market direction, you have correct thought process, but in terms of risk mitigation, you need to price it in as well. Where am I positioned within the sequence? And currently you are positioned quite high up in the run. Okay, let me just clear this chart off because this part's quite messy. You're positioned quite high up in the run here. So even though the trade was good here, you should have mitigated extra protection here because of where it's positioned. Remember, you can get away with it down here, but up here, it's going to be a lot trickier because this can still develop because we're quite far up. You know, we're all the way up here. We know we're coming up to this section. The majority of traders know that. So what's to say that, you know, something like this is underdeveloped, and the likelihood is, you know, we get something like this, it comes back down and it goes, and then you have something a lot more developed, a lot more weighted, and then that gives it enough weight to then push and go further. And I think that's what people would ideally be looking for. But if you're looking to play it as a two-touch, then in the same way, I don't think, you know, what you've basically done here, it can look a bit squeezed now, especially because I'm zoomed out, right? But it doesn't necessarily mean you're wrong. It just means that you're playing a very aggressive trade in an area where it's likely to develop, so that makes your aggressive trade even more high risk. So you've taken a trade that could seem somewhat higher low risk because it has a three-touch combination, all of these things, it's positioned well above this high as well. Those things are good and that makes it low risk, but overall, because of the overall sequence and where you're positioned, it makes it even higher risk if you're taking it with a tighter stop protection. So, you know, even if I crop it like that, I've turned a moderately positioned well, so positioning is good, sequence is okay as well, right? But the positioning within the sequence, which also comes into sequence, is moderately okay. So it doesn't make it the best trade in the world, because you remember those trades high up in the run, on the start of the sequence, those are much better trades to be taking. So adding all those confluence together, you can kind of convince yourself in the moment, okay, this is quite low risk, this is pretty decent, you know, it's moving with momentum, it could go in my favor, and sometimes it will, but a lot of the time, what I've noticed from the data that I've collected is that, you know, because of the positioning here, it's going to develop. And if I know that there's a high probability it's going to develop, rather than me going with, and perhaps maybe you didn't notice it, but it was roughly around about 6-7 pips, you know, you'd be safer just going off with roughly anywhere between, I would say between 13 pips. You could argue it's a bit excessive, and then the risk reward is now like 3%. But the reason why you kind of went with maybe around about 7-ish, 8 pips, maybe 6 pips, I don't know, because you saw 7, 8%, 9%, this is probably going to be a banger. But really and truly, it's the ones where you've taken the extra protection. The market's going to try and convince you to take a trade. That's the interesting thing about it. When you study this and you go over trades and sequence very well, and you look at how they've developed, how many of them commit with, you know, a moderately decent structure, but commit with the confirmation, you'll notice that they do develop over. And I've noticed that quite a lot in different variations. So bear that in mind. They come in different forms. I showed you on this one and I showed you in this sequence here. You can see that over here, you know, even though it kind of went, it then developed and came back round. So then it became this even larger piece of itself. That became an evolved middle section. And then eventually you had a bit of small accumulation there. You see this point here, which I've just marked on, haven't even gone into my watch list yet. This point here is quite interesting because you can see here, you could get away with the trade based on all of that happening. So once that's happened, you can then take advantage of something like this, where, let me clean that bit off, where you can see here, you've then basically had your 1, 2, 3, you've had your large sort of wick, if you will, which is basically washed out that section. It's basically retested this section as well, which is nice. So at that point there, you know, you take this trade, reduce risk if you want to. If you're even more skilled, you can apply the exact same terminology here where, you know, this is a trend. You've basically broken out of this trend on the completion of a larger structure, right, which is going in trend because it's tapped into the larger, higher time frame value area down here. So it's done that. It's tapped into its low, which is more than enough. Then it's coming off with good sequence, corrective by nature because it's, you know, it is Aussie Swiss. But you've had the push away, you've had your first smaller flag, then you've had your larger flag, which is now trading above 50%, but we know we're moving to the upside because of how price is moving. And then what's happened is you've completed on this, the middle section is broken. As we've broken out, we've created our next continuation, which is basically now the final call in the sense of within this larger flag. You could take this as a 1, 2, 3 to break out. And then as you've broken out, you then, what do you have? Right on the top, you have another piece of price action sitting right here, which coincidentally came down, wicked and tested it, came back up. So again, there was a trade, arguably you could have taken the trade here with, call it around about 12 pips stop loss, but you could have got away with a wick crop in these areas because you're basically playing off the volume of the larger flag and it's done everything. But argument's sake, let's say you took 11 pips on that trade and then you've got another trade right here, which you would have seen the wick retest there, and then you would have taken that as a reduced risk entry, and you would have probably set your stops around about just below that wick there, under this high, which would have left you around about there. Now, the tricky thing is, you can see further up in the run, what do you have here? You have your sort of section here, 1, 2, 3. This is kind of the same scenario now. Remember, we're now in that 70% region where you are with your trade. So you would have taken the trade here on the 3 touch, and you would have probably priced yourself, even if you wanted to, let's say you went similar, 6 pips here, price came up, didn't quite get anywhere, came back down, but kind of just retested the low. So you could have argued that, okay, let's say you took a break even for whatever reason there, and then you got entered again, just there, right? Because there was like a double pin bar on your section, so you kind of took the exact same trade again in the same place, and then what happened is it came up, failed and came back down, took you out, washed you out over here, came all the way down here, perhaps maybe even took out this trade at a break even as well, let's say, and then you've got this trade down here, which let's say was even tagged out over there with 1.4%. So at that point there, you've kind of been cleaned out, right? But then what's happened, it's washed out all of those orders, all of those people who would have managed it differently and so forth. Yeah, my wife's always cooking, you can always hear it. yeah. So yeah, so basically, yeah, you could have even taken it here. So then you've got entry potential there, over here. You could even taken it on the candle where it broke up here. So you could have set an order there. You know, there's different ways you could take it, but what I'm really getting at here is the reliability. The reliability of a trade being extremely clean is a lot less in those areas. Now, just remember, we are looking at Aussie Swiss. So this is a Swiss related answer. You can't apply the exact same thought process, but you can analyze that same thought process across other pairs, but understand that we're using this as an Aussie Swiss specific trade analysis thesis, where this is something that we're seeing as a strong commonality. So now when you approach your next Aussie Swiss trade or a Swiss related trade, you might bear that in mind. And that's what I'm really getting at. So I hope that was helpful. Going to clean the charts up there. Let's do that. You know what? Let me clean all my charts. some of my other charts are going to be quite messy. Actually, no, somebody told me there's a quicker way to do this, but I'm not sure. Actually, I'm just gonna continue doing it this way. There is a quicker way to do it, a much quicker way to do it than what I'm doing right now, but we'll come back to that. So almost done. Any questions? Hey, how many trades you took this week? Okay, yeah, we can go over my trades this week actually. Why not? So I'm gonna open up my trading journal in a second. Oh, no, I can't because I'm sharing my screen on TradingView. Anyway, I will still go over the trades because I've got them up on here. I'll just swap through screens. Took EN in the last hour, placed my order 5 pips below the 2 bearish and surging candles. Was fractioning between GN and EN. Which would you have taken? Okay, do you know what? It's a tricky one, right? GN, EN, because they're both good pairs. Sometimes one can fly and the other one can sit. And I've been in those situations where I've filtered wrong. So it really just comes down to news. It comes down to, you know, the overall sequence and just how they're really positioned. Usually if they're going to go together. The great thing is sometimes what you'll notice, and this is a great thing as well, sometimes GN might lag, meaning it might be slower than EN. So EN could fly and GN is stalling and not really moving. But it doesn't necessarily mean GN's not going to move. It just means that if EN keeps moving aggressively, the likelihood is GN is probably going to follow sometime soon. And it could be within an hour, 2 hours, 3 hours. So you get a little bit of time to really prepare for that, which is quite nice. So yeah, so kind of just covering that. So let's see EN. I do think EN could come out to have something. Let's have a little look. I don't like that we're kind of sitting here and creating something. If we were more through, it would have been better. I'm not a fan of EN. EN for the short, maybe. And the reason why I say that is we've tapped into that high there. Arguably, you know, we've kind of come in with this range here. If we break this and we start creating continuation there, I would be for that into New York session. If you've got something like that, don't hesitate on the short, just take the short, because you're basically playing off the bat of the failed continuation, the corrective squeeze to the upside, the 1, 2, 3, which is not the best, but it's there. And then you're basically able to play a sequence to the downside again. And then maybe you get a run here, understanding that there is this gap, but the gap doesn't always need to get filled. This could come down 50%, could come down into this section here. You play the sequence of that, and then it comes all the way back up. So something to bear in mind, but I think the short, if you're looking at shorts, definitely like the short on that. Let me have a look at, let me have a look at GN in comparison. Because sometimes GN might show me that the long is, yeah, okay, fine. GN is way better. GN is extremely better, and I'll tell you why, but you can, it's pretty self-explanatory. Like you've correctively come up into that 1 hour wise. Yeah, you've got clear, heavy-bodied 1 hour, good price action there. Let's see what the 4 hours looking like. Yeah, the 4 hours, it's okay. It's okay because it's washed out. It's done a bit of a washout there, squeezed into it. The follow-through candle hasn't closed yet, and that closes in 1 hour and 30 minutes. But again, that candle can close down here. And then at that point there, you're not going to take the 4 hour entry. You're going to have to wait for some sort of insurance entry. I don't believe... Let me just see where we're positioned on the daily. Yeah, I don't believe this is entirely bad, man. I think this is okay. I'm just looking at that daily candle before, and you see what I can kind of see here, and I don't know if any of you are seeing it here, but we are through this section here. But one of the things about it is that this could be the beginning of a push to the upside. So depending on how this daily closes, it's really going to tell us a lot. This still looks like part of a consolidation to move lower, because we still have, you know, this little point here, which would make sense because it's kind of the origin of that. So moving to that point would make sense. But then again, this is like accumulation area and we are further in the run. So we might accumulate a little bit longer. Can't entirely say. In terms of positioning, that's the clear value area. If I go to EN, if I go on EN, you can see like, is that the clear value area or is that the clear value area? And for that reason, it's like GN could just sell off and then EN just kind of squeezes, gets here and then sells off later. Probably not the most likely, but then also I can see we're coming with momentum into that area. The candles are getting stronger, bigger and bigger. EN is a bit of a subjective one, but the failed continuation would be the clue. It's just, again, if I'm looking at it on the daily, yeah, GN is way nicer than EN. But again, like I said, EN has also got a pretty good move to the downside if it does follow through from one of those areas. So personally, I think as much as I like GN, I think EN could have a much better risk reward in place. But I think GN's going to be a lot cleaner to trade. So I would personally want to kind of time it well with where it's positioned. I think insurance entry will tell you a lot on EN. If you get an insurance entry on EN, definitely just take EN because, you know, there's no issue there. GN still could develop as well against you. You know, it could be doing this and eventually come up here and then you get that and then you have your 1, 2, 3 sort of situation and then that's the sequence you're really playing with. So there's two ways you see it. It could either be underdeveloped, develops into a 1, 2, 3. I think you just mentioned that. Yep. Or we sell. And I think right now is prime time positioning. Personally, if I was really monitoring this, I'd be looking to take some sort of trade for the short here. Really and truly, if that plays out, I would probably mitigate with, I don't care, I'll take 58 pip stop loss, 60 pip stop loss there. And I'll play that for a 4-to-1 to the downside and then just let that be the trade. But then in terms of wanting to be aggressive, wanting to make more profit, wanting to get positioned really well, you have to understand GN, EN, spreads are pretty wild on these pairs and they're not always going to be quite directional. Sometimes they can have some pretty serious pullbacks. If we're going to get some serious pullbacks further in the run, it makes sense as well. So I would go with a larger stop loss of 60 something pips just to kind of keep me well protected. So knowing that, I would look for the risk entry. And if I was going to take the risk entry, ideally I would have wanted to take it somewhere around about there because coming off the bat here, we're kind of retesting that next section there, which is interesting. I would take it somewhere in that region there. So even if you took it here, no problem. I would say good trade. You know, you take it with even borderline 70 pips. You still play it for a 3-to-1, right? Your average trade should be a 3-to-1. And you basing this on a 3-to-1 opposed to trying to get an aggressive right now for a 10 to something, you could get that 10 to something further in the run. You know, you've got your 3-to-1 running in the background. This then drops off. New York session, it shapes up here, gives you like a trade in there, but you're well protected. You already have, let's say, 0.25% risk on your 3-to-1. So you know you're kind of going to get 0.75% out of that trade. Then you've got this trade in here where you're going to go a bit more aggressive. You put 0.25 as well, and you've got a 9-to-1 on there. So the odds are you're going to walk away with 2 point something% on that anyway, and your overall risk exposure is only 0.5%. And there's potentially more scaling opportunities, but you can manage it more aggressively. Again, I'm not a big fan of taking anything below 20 pips on GN. I think it's very risky. Spreads, news, New York session open, all of these things added together, it's a tricky one. Again, how we're approaching and come to the downside right now is a good sign. So looking for shorts is definitely in your favor. The only time I would get put off by the trade, like if you took the risk entry now, the only time I would really want to get out is if the next candle ended like this, right? And it was more of a pin bar and you got the pin bar there, I would then kind of just say, you know what, I might just take a break even because it's not the follow through that I'm looking for. I'm looking for a follow through in price action right now that is going to determine. You can even see if you follow the same way I trade, this was basically a London session confirmation right there. So for me, if I was if I had GN on watch, I'm pretty sure I don't have GN on watch. I have EN on watch. No, I don't have EN on watch either. I would have taken it there London session, and I would have taken it probably around about 30, borderline about 40 something pips. I would have covered it just about there, and I would have taken the trade there, and I would have seen it like this. Okay, great. That's my trade idea, and I'm playing this to the downside. So for me, that would have been the perfect trade in this scenario. I would have seen it London session open. I planned for this pre-London. We came in, we tapped into, we took out the liquidity, we washed out above it. We took out this little piece of price action there, which is very random. And then after that, we've pushed down, and then we've given some sort of pin bar confirmation, nice heavy bodied, and then we started following through. So on this third follow through candle, again, like I said, with a 56, 57 pip stop loss, you're well protected. I know I kind of went over that quite excessively, but I hope that made sense why I would do that. So I can mark down as a shadow trade, you know, I'll add that to my shadow trade collection there because I'm quite happy with that. If I go down to EN, yeah, EN in comparison, it doesn't really show the same sort of good price action I was seeing on GN. I would have to see failed continuation, really and truly. I would have to see this do whatever it has to do, comes down, and then New York session, I get a trade in there. So that one seems like it's not ready, but in many ways, it's not ready because it's not showing the same sort of thought process confirmation that I'm seeing with GN. GN confirmed in London session, which is great, and started committing, and now it's going to be committed into New York session, and then by New York session we might have already gone. Odds are though, keep an eye on it, New York session you might see some sort of spike, could be a washout spike before we go. These things happen if there's going to be huge volume coming into the market for whatever reason. I don't think it's likely in this particular scenario, but it does happen. Let me read some of these questions. So New Zealand yen gave us, yeah, do you know what, New Zealand yen, I made a mistake. So well, I'll try to go through my trades, but I was looking at New Zealand yen and USD yen at the same time, and I was looking at New Zealand yen for the long, and I was looking at USD yen for the short, right? I saw this trade here, I believe it was this one here. No, wait, Tuesday. Oh no, it definitely wasn't that one. It was this one. Monday. It was this one here. I saw this trade here at the same time as my New Zealand, my USD yen trade. And I took the USD yen one, and I should have just kind of just stayed with my original trade thesis because I had New Zealand yen on watch, but I didn't have USD yen on watch. And I opted in to just filter in USD yen based on just a hunch. I thought USD yen would have been somewhat better, but then in the end, USD yen ended up taking me out, and this was the good trade. So I'm not going to get beaten up about it, but that was basically the whole trade idea. So I would have basically taken this trade and left it, and then borderline, I probably, when it was running around about 5%, I probably would have walked away with 4 around about here aggressive. So that was, yeah, that was basically the scenario, or maybe even 5, and I was around about there. And that would have been the trade idea where I basically had that little bit of liquidity there, but I would have been looking at it here, but even though it came down, I would have moved it ever so slightly. It retraced here and I would have got involved there. Now, I believe for me, that was good in session as well. It was like basically just after the London Open at 9 AM on, roughly around about 9 AM on Tuesday. I'll show you the USD one. USD yen. So this one was roughly around about here somewhere. Just go to the 4 hour. So you can see this is what I was looking at. We had this section here where we tapped into that, and then I was looking at the low there, and I'll then go to the 1 hour, and then we pushed away. You can see here that we pushed away in this section and we broke, and then I was looking at Tuesday and I saw it follow through, and then it was around about these sections where I'll go down to the 15, and you can see I'm already looking for trouble because I'm going down to the 15. And then we basically had it roughly around about here. So we tapped into this, that was tapped into as a retest to that section. Then I went down to the 5. So again, looking for trouble. And then at that point there, after we retested it, we had this little bit of consolidation, a follow through retest. And then it was roughly around about here where I was like, okay, you know what, I could probably play that as an aggressive play now, and I'll take that, put stop loss around about there, 15 pips. Oh no, I think I went a bit more. I think I went around about 20. And then I was like, you know what, as a 3-to-1, that's not so bad, because you can see it came back, it retested. So I was like, what other reason does it have to really come back up to the upside? There's not much. Again, this did kind of develop into that, which fair enough. But again, I saw this drop off, came back, almost took me out there, and then it started following through, and I was like, okay, well, at least if it comes down here, I'll move to break even. I'm not going to be too aggressive here, move to break even. And then what happened was it just came up, and then it just took me out just there. So it was one of those situations for me where, you know, it is what it is. But then I go back and look at New Zealand yen, and you can see New Zealand yen, how it played out in comparison. So structurally, I think I should have stuck with my structure on this one. I should have stuck with the structure and just played it. You can see again, look, this is above 70% off 50% of the run as well. You can see this one was a lot more reliable. And this is what people talk about when they talk about some pairs are more reliable than others. In comparison to Aussie Swiss, you don't deal with a lot of the BS that comes with it. This one kind of, you know, gives you the structure and goes, you know, in countless amount of times. It just demonstrates that. So yeah, kind of wanted to point that bit out. After that happened, I kind of just switched off a little bit, and then there was this trade, but this trade shaped up around about swaps, so I wasn't interested in it, and then it eventually went to the upside. Again, that would have been a pretty decent trade with a scaling over there had I survived it. That was that. I also had New Zealand CAD, so this was on a Monday or Tuesday, I think it was. Let me just double check. Yeah. So yeah, it was around about Tuesday-ish time. Pull up on the 4 quickly. So we had this section here, and then price basically, this is basic mechanics really. You can see we had the hook point here, multiple near misses. We then took it out, left a bit of a gap. We came down, sold, failed to sell. We then took out the high, came back up. But at this point, I realized even when it came down here, it's already done everything it needs to do, right? In fact, it's done everything it needs to do to the upside, but it hasn't come down to the downside just yet. So it looks better for the sell. And then at that point there, I kind of understood there was like a phase 1, phase 2 into that section. And I was like, right, this is going to sell. Let me get in. And then what happened was, as time kind of progressed, I wouldn't say I took my foot off the gas, but I was a little bit cautious with it because I didn't want to just jump the gun on a trade. So I was looking at the trade here, and I'll break it down how I got to this. But essentially, that was basically the structure. I'll go down to the 15 where it's a little bit more clear, and you can see it here. So if I'm basing this as a first bottom, second bottom, then this is the high, which it's basically not done. This is the internal structure. The internal structure is then expanding into that section there, right? After that section there, I was looking for an entry, which I took right there. And I took the entry here and stops just above with 10 pips. I did get taken out just over there. Now, when I did look back on it, it did seem a little bit like maybe I moved in too quickly, maybe I didn't, but that was a New York session sort of pullback. So over here, it was New York open, and then it basically just came up, tagged me out, and then came down. Again, it was one of those ones where I looked at it and I was like, you know what, this isn't the worst case scenario, but I was happy to take the break even on it based on, you know, how it kind of developed. You know, you had this push up, you had this section here where this was just correcting. This could have easily just started moving to the upside. And then what you have over here is this then becomes a failure, and then it's making its way aggressively to the upside. based on that trade thesis, I didn't want to take unnecessary loss, so I was more than happy to take the break even. I think I did make a good decision, and I confirmed it with Mark this morning, and he also did tell me it was definitely a good decision to take the break even there, in terms of just risk mitigation. But yeah, again, I was playing this as a 90% rule trade, so I would have already been out the trade. So let me just pull that up. If I just mark that on here. There we go. So there's borderline in that section there. Anyway, I'm not going to draw on perfectly, but you can see I would have easily been out for roughly around about, well, obviously, I think it was around about 6% when I checked. Yeah, 6% there to 10 pips, and I would have been out here 90%. So that was it. I mean, you know, I was really, really happy with that overall trade thesis. I think after this sort of middle section pullback as well, perhaps maybe me saying 6% isn't really the case. I think maybe 2% would have probably been where I got taken out there. And then understanding I made profit on that, I might have tried to get involved again in another area. But yeah, that was the goal of the trade. And I think in terms of just setting it and leaving it, mechanical sort of trading play, that would have been pretty decent for a 6% winner there. Another trade that I took, let me just quickly flip over to my trading journal. Give me a second. Let's have a little look. So I took AN. Oh yeah, I did take AN and EU on Monday. So that was the UJ and New Zealand CAD trade I just showed you. The GA one, I took a break even on. So this was GA. I'll just show you this one. It was yesterday's one. I didn't take a break even, sorry. I took just under a % winner. So I'll put it on the 1 hour quickly. Now, actually no, I'll start on the high time frame just to kind of demonstrate the whole thought process there. So you can see we are moving with momentum to the downside. Now, even though there was like a smaller, tighter flag in here, I understood that, okay, I'd be more aggressive, but there's no way to say that this is going to start developing, right? This can just continue dropping off aggressively. It doesn't have to start developing. And for that reason there, you don't want to just take your foot off the gas and be like, okay, it's not ready. I then was looking at it for a point where price could create its top to then eventually come down. And I was looking at this little section there, the start of origin of that candle. And then I go down to the 1 hour where it's a little bit more clear, and you can see it was just basically this point here or this point here. I thought, you know what, that point there is still very valid and it would make sense in terms of, you know, size and whatnot. But this size is more than, this point is more than enough as well. So I was like, you know what, first rejection candle, if we don't follow through and move to the upside, I'm looking for that. So I got in here. Stop was roughly around about 20-ish pips, or 25, 26, maybe 30. I don't actually know, but I know I was covering high there. And then it was 0.8% win for me, which was roughly around about there. And then that's roughly around about this period here is where I got out, because I understood that this is more of a trap at this point here. You know, we don't start creating continuation to follow through just before swaps. It's very unlikely. It's probably just accumulating while people are just repositioning their shorts right now, getting out. Bigger players maybe getting in short. You know, these sort of things are happening. And I was like, all right, I'm getting out of this area, because what I wanted to see was a clear follow through after that big candle there. After we had 1, 2, 3, 4, 5 hours of stalling, it was either going to just follow through or it was going to just mess about. I was just happy to get out. I was like, you know what, it's not really worth it for me. It's likely to do two things: either follows through overnight and I'm happy to not be in the trade, or it's not the one and it comes back up and then it moves to the next area above. So yeah, I was happy with that. So I took this with like a 0.8% winner, which was roughly around about there. I know I got out pre-swaps around about an hour before over here. And then yeah, that was that. So happy with that trade anyway, GA. And then I was looking to get re-entered, hopefully London session, if we overnight kind of just moved up and then we just impulsively came down into London session, created continuation and went. That was basically what I would have wanted to see. But the likelihood now is it's just really underdeveloped and it's messing about. So I'm not gonna really force anything. I'm gonna just wait on this one let it do its thing, and then eventually make its way back up to these areas and then see what happens. So that was basically the GA one. And then to cover the Euro USD one, which was on a Monday, where is it? It's over here. So this was my Euro USD trade over here. Very simple, straightforward trade. That trade right there. And I came out for 2% over here. And yeah, I was happy with that. I mean, you know, at the end of the day, like, I didn't expect it to be a flawlessly amazing trade. It looked good, everything was there, it's just, it was corrective on the way up. So it was like it either goes or it messes about, and I want to be a bit more aggressive because I used one of my old accounts and that one was starting in 1% drawdown. And just before this Euro USD trade, I took another trade, which was Aussie New Zealand, and I took a loss. So it was in minus 2%. So then after this one, it brought the account to break even. So being more aggressive made sense. And keeping that all in mind, you know, it is what it is. So that was basically the trade. You can kind of see what it is here. If you look a bit carefully, you've got failed continuation there, and then you've just got accumulation of the next continuation there. And then I basically just played it to the upside to see if we could tap into these areas. But there was just so many little areas that I was like, you know what, this can mess about. This can really, you know, play on people's mind. So I'm going to leave it. And then, yeah, just happy with the aggressive management on that. Let's have a little look at the last one. So I did have, what was it? It was Aussie New Zealand on the same day. I believe, if I pull it up, where is it? Aussie New Zealand. This one I was quite disappointed taking it. I think perhaps maybe I rushed. I pulled the trigger a bit too soon on it. But then when I looked at it, I was like, you know what? I wouldn't change anything because it wasn't the worst trade in the world. Here it is. Okay, so we've got a sharp liquidity point there, and then we basically have this little section here. We then had this. So originally, after we had this sort of corrective move to the downside, it was starting to look like we were just moving a bit sideways, but we were committing to the downside, because if I went back to the daily or the weekly, you can see that we are positioned in an interesting area where this can just really get messy and consolidate for some long amount of time. So I was aware of that. I wasn't expecting it to be, you know, pretty much complete like this. I thought maybe we might see something where it comes lower and then it starts coming up, and then, you know, it develops and then we get something a bit larger. Again, that's just my bad for kind of just speculating on the size of what it could be, when really and truly it was more than enough. So we had this section here, this high here, that's your middle section. And then essentially we kind of had a gap there. If I go off now and we look at my trade and we go to the 1 hour, what we can see here is that we technically did have everything we needed to go long, but for some reason I was still looking at this to potentially go short. So even after we had the break of this section there, for some reason I was looking at this as, what if this kind of makes its way back down, right? I think that's where I kind of made a bit of a mistake, because I was looking for something in an area where it didn't really have as much reason to go short as it did to go long. So what happened was, if I zoom in a bit more, you can see we had this little bit of liquid area here. Let me just pull it up here. So we had the low there. We had this sort of being your corrective middle section, and then we had this little bit of a gap here. So I was thinking, okay, if there's a gap there and this starts accumulating here, we've got, you know, we've got a little high point there. We've got two bottoms in here. This comes over here. This would be a great area to go short. So then around about London session, I was like, you know what? I will go on the 15-minute and let's just wait. And then I believe what happened over there was This is where I made the mistake. It came here. I had that marked on. I'll take this off. And you can see how I kind of did pull the trigger a bit too soon. So we had this little section in here. I was like, okay, that's your mini little double top there. We've got that section. This is kind of where the liquidity is sitting, and then we're squeezing into it over here. Perhaps maybe in this scenario, we could take that pin bar, right? Because it was London session. I was like, okay, that pin bar, and then we can mitigate against it above. So that's what I did. I took it on the pin bar, the next candle. I put it just there. And then stop loss was above, roughly around about 10 pips. And you can see how protected you are with 10 pips at this point. So I thought, you know what, even if this does come back up, I'm still protected above that high. And then you can see the trade idea here. If I pull it back now, and I was anticipating this to potentially at least make its way back down to this area there, which would essentially be retesting the back end of that. So I thought, okay, well, if it comes down here, I'm at 2.5%, so I'm pretty well protected in this area. And yeah, it just wasn't the one. So I wasn't really mad with the trade. It was one of those ones where I kind of realized perhaps maybe the trade idea seemed good, the time of day seemed good, the sort of squeeze into it was okay because there was a subjective first touch into the squeeze. But then as price kind of just stalled there, I was like, you know what, I'm still well protected, so I can just leave it and come back and look at it. And then yeah, just eventually it took me out going into New York session and just spiked up. So it is what it is. Not really crazy about the trade anyway. Let's see. USD CAD this morning, I took a loss for the short. Let's have a little look at USD CAD. Okay, similar situation to what I was kind of going with. Like you've kind of got this little low here, you've got that one there, and this one here. Really and truly, and I'll just invert this. What we could see here is, you know, okay, very borderline near miss, but the majority of the liquidity is sitting in this area and this area, right? So in terms of kind of washing out, it's done pretty much all it needs to do in that area there. And then it's basically cleared this push down, and then you've tapped into this section here. You're looking for the continuation for it to continue moving higher. It failed in this area and then it went back against you. Yeah, I mean, your trade idea is not bad. If I actually zoom in, I'm on the 15 minute. I think you probably would have taken it on the 15, even on the 1 hour. Yeah, I mean, what's the time of day as well that went? Let me see. Oh, 3 a.m. What? 5 a.m. Yeah, I mean, time of day wasn't great. It was definitely not in a, I mean, Asian session or USD CAD. Do you know what? Like, I can see the trade idea, even if you took it just a few pips above. Oops, let's go wrong way. Let me invert this back. Yeah, so you take it on that candle there. You go with even it's 8 pips. You play that. That's, do you know what? It looks good. Candle momentum tapping into this area. Yeah, the trade idea looks pretty decent, to be fair. I just think with all that momentum pushing to the upside, it's a tricky one because it's just really momentum filled. And then you look at it on the 4 hour, on the weekly, or even the daily. Let's have a look at the daily. Yeah, strong daily momentum from that area there and a huge washout. And it actually closed as some sort of morning star on that section. So yeah, I mean, if you considered those bits of information, I think you'd be okay with the loss going into the trade knowing that. 4 hour, yeah, huge momentum to the upside. It's tricky because it looks very bullish. Also, look at the sequence on the way down. Like, it accumulated a lot in these sections, and then eventually tapped into the liquidity areas, and then it came back up. So it's kind of your not so clean bull flag, but then with a bit of a liquidity run here where it's completed, then it just dips out, taps into, call it the footprint or whatever, and it comes back up, and now it just creates your flag here and it goes long. I think that's basically what we're seeing. So yeah, you just got to wait for continuation now. Yeah, those ones. I mean, the clue was basically the daily and the 4 hour. It's the ones that would have put you a bit more cautious and made you want to maybe go for a reduced risk entry next time. Again, you can study those. I think it's something good as well, is just see when you've had momentum on the daily and 4 hour and you've tried to go the opposite way, see how you could have, see what surrounding criteria to those trades that played out support your trade thesis, and which ones played out and which ones didn't, and why they did and why they didn't, and then stacking those confluences and see the similarities. That could really help if you have the time to do that, of course. The 1, 2, 3 was a factor. Yep. I have Aussie CAD for a sell now. Can you forecast it for me? Yeah, sure. Aussie CAD. Oh, I see what you're looking at. I'll be careful for the short, really. I know it's not the thing you want to hear all the time, but the reason why I'm going to say be careful is because, you know, you've kind of got this, and right now, if I'm honest, that's kind of like your squeeze into that touch there. So if I go to the daily, this could be done two ways, right? It could be this, where essentially when you look at it a bit closer, it could be underdeveloped, where it's still going to become the 3. So you could be correct where, you know, this is now leaving a gap here, and then it's coming back down for the 3rd touch, and then it's going to go. So I see that as well, but I don't think it's the trade to completely smash through to the downside just yet. I'm going to zoom out a little bit more just to see if there's anything to the left that really, yeah, no, this looks like a long, man. Not right now. Right now, it does look like it could be a short, I'll be honest with you, but the overall higher time frame thesis looks like a long, because look, we've cleared this, we're creating continuation, we have the next point above. It's probably going to smash through that and make its way to this area here. So for that trade idea, I think the long is predominantly the higher time frame trading picture. Let's build the thesis for the short. So straight away, if I'm looking at this closer, I can see middle section. We've then basically started trading above this. And now we are accumulating, but we tapped into the origin of the liquidity there as well, which is an interesting point. We've then pushed away. Let me go down to the 1 hour. As we pushed away, we had sort of your base, call it, over here. That was your base. And then what happened was we came back up, but we failed to continue higher, which is a positive sign, because that's basically confirming that all of this was momentum built for the downside. This was a bit of a pullback, which had enough room for it to push higher, but it didn't. Then we sold off, and then we've basically left a bit of this sort of section here. It's not clean. I don't like it because it's not really, it's already tapped into the low here. So for that trading idea, it's kind of like, is this becoming something that I can't really read? Is it underdeveloped? Is this now developing more weight for the next push? So this was a larger flag into the next larger flag that then becomes some sort of corrective running channel to the upside, where we see something like this, and then it comes up, pushes higher, comes down, and then does that. And then that was your trade here. And then we basically get the trade here. Then we have more trades there, and then we basically play it to the upside. And then over here, we just get more continuation and continue. that's basically what I'm seeing in the side of going against what you're looking at. Let's have a little look. But if you want to go aggressive, I hope you're not doing it with a full 1% risk. That's the only thing, because right now I'm not seeing enough confluence on the side of the short as I am for the long. So you are playing against quite a bit. Yeah, I would mark it on here, and I would want to see something solid, really and truly, because I don't like having to crop through wicks and do something like that. Even though that can look nice, it's like I've got to force it. It's a similar situation where I think this is the base. This was your situation where it came back in, it retested this, but now that's your true area. So you would want to see a kind of a washout here. A washout would be a very good sign. An insurance entry if you wanted to get a bit more tight. I think because it's Aussie CAD, you could probably get away with an insurance entry. Stop loss though, stop loss placement, even on a reduced risk entry, yeah, 10 pips would be more than sufficient. You'd still be covered above the general high there. And you played about 3-1 into that low, but then playing the bigger picture of it coming down to the downside, you know, you're looking at about 10-1. So yeah, you'd want to see that washout before you even try taking entry, because the washout would basically be the first kind of signal confirmation saying that, okay, we failed to continue above this area here. We're not moving to that section there. And then that insurance entry would be the confirmation that after we've had the washout, that's the confirmation for the short. But if you want to be more aggressive, you can take the risk entry. It's just, if you take the risk entry, all of those variations of what I said it could be developing into, could be tapping into the next area of interest here. You basically are accepting those risks, and the washout basically confirms that the trade thesis of it coming to that point is less likely. So bear that in mind. Let's have a little look. So it says EJ 4 a.m. your time yesterday morning. Do you see anything? EJ. Nah, EJ's not that nice, man. This is a good sign as well though. You know, you've got failed continuation there, which again, you've off the bat of this where you've had your double top high there. You then expect, okay, this continuation, if it follows through, great. What happened was it just smashed through it. It then broke out for a new high over there. And then what we're seeing here is probably our next sort of move for something like this. Where you could be seeing something like that. And then this could be some sort of channel to the upside. So yeah, I would keep an eye for a long, but I think it's underdeveloped at this point in comparison to some of the other yen pairs we were seeing. In terms of that 4 a.m., I don't think so. I don't think that this, I'd probably assume it's probably around about here. If you're going to the 15-minute, you're too zoomed in on this particular one, but yeah, this one, you probably could have got away with a trade here in those regions, even on that candle there. You probably could have got away with that. It's pre-swaps, and then you'd be trading it into the low there for a 1-to-1. You probably would have taken a break even or a 1-to-1. So for a 1-to-1 trade, yeah, sure. Is it worth the risk? I don't think so, but you know, yeah, for a 1-to-1, and then you would have been out, or you would have just taken the break even when it wicked up there. Anyway, regardless if it did follow through and you survived it because you weren't by the charts, it went down for about 3%, but then it came all the way back up anyway, and would have taken you out for a break even if you had left break even. So yeah, it's not really, there's not really much on that I can really say is great. Yeah, absolutely. Wait for a developed structure. That's your best bet, truly. In most trading scenarios, by waiting. Anyway, let's go into what I've got on watch today. So this is a trade I was saying I took yesterday, which, don't get me wrong, it's not a bad trade. It's just, you know, it is what it is. Could we follow through from here? Yeah, most likely it's possible, but at the same time, I'm looking for something a bit more than just that. This is probably still going to develop. If this goes New York session now, then it is what it is. It comes back up for next week, and then we get some sort of trade in there. I'm not against a trade like that. I think that's pretty great. So I'm going to have to wait and see how that shapes up for New York. It looks like we're tapping into this section here now. So with that in mind, this could still sort of rebound and still make its way higher. And then it's going to be a next week trade. So I'm not really bothered about this selling off right now and that I got out earlier, because again, it's nothing special. GA is nothing special today. NJ, yeah, NJ, I'm looking for a short, I believe, on NJ. Let me just clean this off. Oops, that's not the one, that's this one. If I just pull this up, just gonna mark it on. I'm looking for a short here. So New York session, I'm hoping that it spikes up and we get something like this. Go back to the 1 hour. Yeah, I think it's underdeveloped now. Now that I look at it a bit closer and how it's developing onwards, I think we're probably going to get something a bit like this. Taps in here, into New York session, we come up and then boom, we sell. That would be solid. So I'm going to be looking for a bit more progression on this one. I want to see if we've got New York open around about here. I would want to see this now move here and then just aggressively push up for New York session, and then we just sell. That's what I'm going to be looking for. So not bothered. That's your low. As long as we get close and we gap it, that's great. And then we come back up aggressively into New York, and then maybe 1 or 2 hours after New York, great. Oh yeah, I'm sorry about the network, but don't worry, the recording's there, and hopefully the recording will be pretty decent. But yeah, guys, battery is running low on the tablet. So let's do this last one then. So let's do GU. This was NU, by the way, and GA. Let me do GU and then I'll end it there. So last one on GU. Right, let's go daily. Daily and GU. Oh, we are positioned quite well over here. I actually quite like this, but you know what? Because it's end of the week, I wouldn't be surprised if it does sell off a bit more. And then towards the end of the day, going into next week, we get something. So just be a bit more on the cautious side here. Looking at the daily candle as well, we're on that breaking candle, so there's nothing special about it. But we are in an interesting area, potentially for sells. Let me just have a quick look at the DXY. Yeah, DXY for the long. So GU could potentially be actually a solid short as well, because DXY looks like it's coming to the upside, really and truly. So if that's the case, if we go back and we look at GU now, GU for the short, yeah, I wouldn't even start looking for just longs. I would be wary that this could start really moving for shorts. So wait for this. If it comes into next week, most likely now, if you get a trade like that, take that trade, honestly. Take that trade and play it to the downside. Because sequence-wise, if the DXY is going to be flying to the upside, most likely GU is coming back down to these areas. So you can still take full advantage of that being a failed continuation, and then you're basically taking advantage of that one there. That's basically what you want to be doing. In terms of the long though, don't get me wrong, the long is still an option because of where we're positioned, but the short is still looking more interesting because of the DXY's current positioning. In terms of the long, you'd want to see this kind of wash out, come back up, and then, you know, signs of this would be good to then continue. But the only thing about this, whilst it's sitting below that retest, is this can still develop and then become that and still be a part of the continuation to the downside, right? Just bear that in mind. So taking a trade on the first insurance entry still might seem low risk, but it's still a little bit higher risk. A second flag would be a little bit nicer in the sense of if you pushed up, you had the first continuation, then you had your second, and then we're now no longer testing above these areas and we start creating more continuation. Something like that is more probable because when you see where it's positioned, it's really responded to the 1, 2, 3. You've had sequence, and then anything with it, it's likely that there's more confidence in the market, and then you're going to see price really making its way back up. So that's how I would really be looking at it. But it doesn't mean you can't take the first and second flag. It just means that if you take them, the risk is becoming less as you get better sequence. So the first one will be a bit high risk. The second one would be a bit lower high risk. And then the third one would definitely be becoming low risk. And then you'd slightly be moving in a good sequence to the upside. And that's the way I see it. But I'm definitely looking at the shorts on this. I think even though it's kind of positioned like this and, you know, the longs look great, I think where people are going to be so focused on trying to buy this right now and getting in early and whatnot, this is probably going to be selling off because of DXY. So probably sells off, does that, creates something in here, New York session or whatever, and just Monday morning comes, continues going. So you'd have to be careful with that. Let's see EU as well. Yeah, EU, look at that. It's already just making its moves. It's building up for something. You can see clear point there. I don't think this would be the point here. I think that's building up and then it just drops off and starts moving to those points. I think this is solid. I've not really been paying too much attention to DXY related pairs, but looking at this, yeah, look, you've got that little point there where we are moving towards it, but at the same time, we could easily smash through that. I think we get continuation, you could manage that into this area. So remember, if that happens, in theory, GU is positioned there. GU is positioned there right now. So with GU, what you're expecting with the DXY is the DXY sells from here and it continues going. It doesn't seem likely. It seems like GU is probably going to go to its next point, but the next point really and truly is like one of these areas here. So it needs to go up here for it to then tap into those points, which makes more sense for the DXY to go long, which then in theory makes sense for us seeing the related pairs like EU, GU continuing. Running on 6% on the tablet, but I will look at the last one. I did say GU would be last, but let's do gold because I know there's a lot of people who love gold. Yeah, gold for the short, man. Do you know what? Zeph, I'll be honest with you, yeah? It's one of those ones where gold was looking like it could be a good recovery, but then at the same time, as long as it kind of just stalls, there's the possibility it could also be a short right now. I'm for the long. I think the recovery play makes sense. We're in these areas here, but you can't deny how it's shaping up here. So I would want to see it two ways. Either it follows through and it gives you continuation there. Take that. Obviously, I know you probably would. Take that trade there. Even reduce risk entry. Don't let the reduced risk entry get past you because you might have got the perfect structure. You've still got a structure below all of that, and you could basically play the insurance entry there. Don't play anything in these areas, right? Wait for it to clear that and take the trade down there and play that for the short and then manage it into that area at least, right? But the odds are it's probably going to go a bit deeper on that, probably into the next point down there, right? And you could basically play that. In the case of the long, you'd want to see this structure here fail and it comes up and you get some sort of structure up here. And then you could basically play that into the next section there and then hopefully higher. And then you basically get in the long there. And that's basically it. So I hope that was very, very useful. Oh, you meant but, yeah, for sure. But yeah, it's looking good. It's looking really good. Yeah, cool, guys. I hope that was useful. I hope there was a lot of valuable lessons there. I know we went heavy on Aussie Swiss as well early on. I think that was probably some of the best lessons there as well in itself. Definitely, if you missed the beginning of the video, there was some good information on Aussie Swiss that I shared. But yeah, guys, hopefully we have a good end to the trading week, and I'll catch you guys in the next one. Take care. Take care, guys.